Welcome to Bears in Exile. Today is December 24th, Christmas Eve, and this is just a quick special look at the currencies, looking at UUP and FXE. So hope everybody has a wonderful Christmas, and away we go. So everybody knows that we've had some weakness over the past few days in the market, fiscal cliff, etc., etc. We've moved to the new format where we are now posting charts online. It's faster, better, clearer. But every once in a while we'll do a video, and this time it'll be the currencies, because I think they have a lot to do with what's going on. And if we know what they should do next, we should be better prepared. A lot of people are expecting a bounce in the market at this time. A lot of people are expecting a really nasty decline in the market at this moment. So we need an edge. And so here we are with UUP, the US dollar. We had posted a chart about a support area right here just this last week. We were coming into it right about here, and it did hold. It did bounce, it did pierce it, but it did get above it, never closed below it. And what else do we have? Well, we got an uptick a couple days ago, and it was resolved today, here on Monday, half-day trading day. So you could look at this and say, okay, bubble corrective move, it's fixed. Is it going to go down? Is it going to go up? Well, we have lower price consensus level from the month of November, which should be some resistance. We have the long-term moving average bar above us in the 21.85, actually 87 area, which should be resistance. We have the all-important line here that we've talked about so many times in the past, which should also be resistance. So between here and there, what's the likelihood of it getting all the way up here? Well, it's not bad. We had a bottoming area as we were coming into the support level that we were talking about. We have worked most of it off. Normally when you have a bubble corrective move, you want to see what it wants to do next, and we should do that. But are there any other signals? Yes, there are. We have positive divergence over here in the MACD histogram, and as of today, that has been worked off. So you can scratch that out. But we're looking for a bullish cross on the MACD itself. We have the RSI rising, we have the CCI rising, we have both stochastics rising, and now we have the 14-day RSI moving average rising. So in the daily time frame, we have really good confluence for further move to the upside, which would go really well if there's not an agreement fast on the fiscal cliff. This would put more pressure on the market as a whole, and a big move would be going right into all of this resistance. Major price consensus level from the month of November. So is there good reasons for going up further? Yes, there is. Is there a defined area where it should have problems and potentially stop? Yes, there is. So at this time, the dollar, more bullish than bearish? Absolutely. Absolutely. And getting to the 21.9 area, and slightly above would seem entirely natural. Now conversely, a lot of people saying, oh, we have a head and shoulders right here with a shoulder, head, shoulder, and this does look proper to me at first glance in most respects. The right shoulder is higher than the left shoulder. Excellent. We do have a well-defined neckline. I'll put that in here right at this moment. I'm sure you've seen this before because everybody's talking about it. And you would look at this and say, oh, well, we already have a break. We should be going down to, oh boy, 25.55. The target would be 21.25. It would be right here. This would be the target right there. Actually, I will make it larger just so that it can be distinguished really well. There it is. So that would be the target, and that would be great for the market if it were to work out. Now, if you're looking at this from this kind of a perspective, then you would have a break of the neckline, which would be right here, and this bounce here would be taking it up for a kiss and then drop. That is entirely possible, but in my opinion, it would be more likely that it would come up here, break it, and hit this, and then do something really weird. So that would be my guess at this moment. We get up through it, and then everyone could say, "Oh well, this formation has failed. Time to get long," and then it breaks back down through it. Then again, maybe it could just get up to it and then fall apart. But regardless, either of those situations would be dependent on a resolution to the fiscal cliff. The question is, how long does it take from here to here or here? Do we get a deal? So anyways, that's my thought on that, and that is the target if this were to play out. So just want to point out all possibilities. And going on to FXE, because we need confirmation of what we are thinking about going up some more. Alright, FXE, the euro. When the euro goes up, it's good for the market. When it goes down, it's bad for the market. What do we have with the euro? Well, we have a new recent high that is bullish. It should be retested at some point. Should be retested. Beyond that, we have a downtick as of Friday. Downtick gives us a target of, I want to get it really nice and pretty here. Right about 130.21. I'll just call it that. And of course, it has not been met yet. There is more to the downside to achieve that target. And is that right? Yes, that's right. So, this going down a little bit more. Does that match up with UUP going up? Yes, it does. What does the downtick target coincide with? Oh, yeah, it doesn't really coincide with this high. It's close to it, but it's not quite it. But there should be some support at this point right here, which is really darn close to the downtick target. And we had a topping area with our new recent high. It is working off, but it is still there. What else do we see? We see that we have a negative divergence here in the MACD histogram. Has the negative divergence been achieved? No, it has not. And look exactly where it is. It's the downtick target almost to the T, just a couple of cents below it. So now we have something a couple cents above it, a couple cents below it, and then our target right in the middle. I think that that is an outstanding and natural place for it to go. Beyond that, you have the CCI trying to be in decline, the RSI in decline, the stochastics in decline, and a first day downtick on the 14-day RSI moving average. Of course, a declining MACD histogram, and the MACD itself taking its sweet time, but a little bit down there that I'm not overly enthusiastic about. But so we do have a natural target here. It does suggest that there is more upside in the market, which is what the UUP also suggests. And so further weakness, absolutely. Do we have even a close deal on the table with Congress? No, we do not, which should imply a little more weakness as well. So yeah, we have something that makes sense, and we will see if it works out. And I think that that's going to be about it. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.